The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, this 22nd day of January, and what a day. The futures were up 20, and they were down sharply. And now the Dow is back at 124 to the upside at 17,677. S&P is at plus 14 at 2,048. Comp index is up 36 at 4,703. The VIX index is down at 17, down at $1.77. Interesting session, gosh. You got the bank index is up slightly. You've got gold. Now, this is going to be very interesting. Let me show you something. So you would expect that there'd be some impact to the dollar, right? Euro started to rally a little bit. No, euro plunges. Dollar goes to another recovery high. I've got it. Unless I'm wrong, I've got this as a leg B in the Chapman wave in the 120-minute chart, leg E in the daily, leg D in the weekly. The leg that is most important here in the monthly is one of those legs that you seldom see, except in a cup formation as it's going to the acceleration phase. And acceleration phase takes it right through the 92.63 high back in, was it August or July of November of 2005? And that means that diagonal left side, right side price time match to the exact month, just as we've got in the Dow, 43 months on the left side, 43 months on the right to December, and we haven't yet broken to a new all-time high. Anyway, I'll talk about that in a moment. But what's really important is that the next level of resistance would be 94.13, the high, the little peak on November of 2003. Wow. This is an amazing market. And of course, you had Draghi talking about a stimulus. It's amazing. Like sheep, everybody's copying the same thing. If it worked, why not do it? And now let's go to the gold. Gold, you would anticipate. See, I said to my subscribers, we happen to be long gold via one of the instruments, one of the ETNs, and ETF, I believe it is. And what I'd be expecting is some kind of a pullback here. We based it on the 120-minute chart peak E, and we've had a pullback in the gold contract continues from 1307 down to the low right there of 1279. So it's about 20-something, 20, what did I say? 12, yeah, maybe 26, 27 points. And now what's really interesting is that same kind of spiral that we've seen in the monthly chart of the dollar is being activated here in the weekly in leg C. The technicals are very good, but the stochastic hasn't gone to that 80% comfort level. It's at 71%. So I'm anticipating that within this context here, if you look at a number of gold stocks, let me just grab something, GG. GG is in leg E, above the 200-period moving average. The 9-period moving average hasn't yet crossed the 200-period moving average. It's going there. But the 21-day moving average at 2387 is the support, and it's at 2471. And I would not be surprised if it digests at some point, goes a little higher, but it could really digest over a period of 2-3 weeks between the 2284, let's call it 2199. Let's just say, for argument's sake, 22 to 2550. That could be a consolidation phase in a stock that's just been a tremendous move to the upside. Leg D in the R Gold. This is a royalty company, Royal Gold Inc. And MACD's great. Stochastics at 93%. Nothing wrong. I've been talking about gold having a rally going into, the first quarter, January, February, March. Yeah, maybe even into April, March, April. So let's just go on with our numbers. So EUR USD, and what do we got there? The euro dollar currency pair, plummets could have recycled. This could be G/C on the daily. Ay, ay, ay. Nobody's defending this. That's the most important thing. You want to see countries, not you and I or anybody else. You want to see countries get behind. When they are behind a currency as they are behind the dollar, the American economy is still one of the best in the world. The dollar represents the United States, and it's one of the best currencies. So what we're looking at here, and of course, the dollar currency, the euro-dollar currency mix has a percentage of many currencies. So let's just look at the USD JPY, and then I want to go to bonds because that's really important. Yeah, just kind of hugging a parameter between 119 and 117, not doing very much. Bonds, I think we made at least a shorter term top. Let me show you something really interesting. When you're looking at this weekly chart that I show my subscribers every week to my opening call, and you look at the 30-year, that's the white one, having gone to a new all-time low, at least for the charts that I've got. I don't know if historically it's all-time, but it's 23, what have we got? We got 23.51 was the low. It's now at 24.47, up 7. So finally, you've got a little bit of a turn to the upside in the weekly chart of the currency 30-year, sorry, not the currency, the 30-year T-bond yield. The 10-year T-note yield has gone to a lower low, but it's still within the context that it's been many times before. And the 5-year is way up. It has not dropped like all the others. I'm watching this closely. I want to see if we're going to get a little overlap here. We'll be watching this very closely. That's 5-year in blue, kind of goldy, browny, is khaki. Whatever that is a 10-year T-note yield, and that's the 30-year T-note yield. Let's get back to our story because I want to get to our callers. Crude oil tried to rally, and it's failing. It's down $1.21 to 46.56. We tried to go. We had a little bit of a profit in natural gas the other day. I tried it again. We lost. We got a 1.3 percent loss this morning. I just thought it was very interesting. I know this chart pattern so well. You make it a cup formation, you have a spiral to the upside, and then you come back, and it's in this testing area here, it must not break 1409, but as long as it holds above 49, it's in this area that you might get a bit of a stronger bounce, but at this point, nothing there in natural gas. I'm sorry I even wasted my subscribers' time. Now, as far as the portfolios are concerned, we took some profits because we raised the stop on our long position on the S&P. Sorry we couldn't keep it, but I just had it. I need to have stops. That's just the way it's working in this volatile market. So we took a nice profit, nothing like it would be if we were still long, but that's okay. We've got plenty of long positions, and not yet have I gone into the short side. I'm close, but I haven't gotten there yet. So let's go to Freeman in Dallas. Freeman, how are you?
Pretty good, Basil. I got a question about Delta Bravo, Deutsche Bank, the German bank. Would you start a long position here because of QE? I know $1 trillion of something has an impact, no matter what people say.
So what we're looking at here is DB, which is Deutsche Bank, AG, ORD, and what it's looking like, I think you timed this beautifully, because this is the first sign with the doji candle in the weekly chart that there's been an upside reversal with the stochastic giving a positive divergence, but most importantly, it tried it before. It did have a rally to a leg B, which is a pretty nice percentage bounce from 29.24 back in October to a high of 33. Hey, that's 4 points. That's about 11-12%. This time, though, what we're looking at is that the 9-period exponential moving average is starting to flatten out, which is a good sign in the weekly. I'm doing the weekly first. Monthly chart we can't look at because it's got the H pattern, and that H pattern is saying somewhere in the 34s, if it does have a good rally, that's going to be the real test of strength. So I'll leave that for now. But your daily chart, first of all, You did a great entry point. The 120-minute chart has gone to ABC. This is in leg D right now, but 30.51 is the upside target I would have based on the 200-period moving average. And right now, it's in leg B. I love the fact that you're in it off the low, giving you a chance of seeing a very nice percentage gain. And then you can just start raising. Now, this is what I would do. I would try to keep a core position. 29.53 is probably an area that if it takes it out, you got to expect that the 29.26 level of the 9-period exponential moving average is going to be tested. And if it breaks and takes that out, certainly if it takes out yesterday's low of 28.89 at any point, I would just say to you, be really careful, because now it has a chance to fail rather than successfully running to the 31s and then the 32s. However, what price are you in at?
No, I'm not in yet. I'm thinking about getting in. I'm not in yet.
Oh, I thought you said that you had just started a position.
No,
you were thinking.
I was thinking of, yes, I'm thinking I would get some European exposure. That's why.
Okay. Oh, you know what? I think this is the move that has the potential to have some longevity to it, still based on a short, I wouldn't even call it intermediate term. You got to go one step at a time. So here's my recommendation. DB trading at 30.04, up 22 cents, responding really nicely over the last a week and a half since the low of, what was that? Of January the 12th. So it's acted really nicely since that Monday. This is the second week. Now, what I'm looking at here is, if you want, I think, Freeman, the way you trade, it's not a bad idea. You could start a position right here at 30.03. I wouldn't mess around, even though it's leg D, and there could be a pullback to 29.56. You could either just wait a little bit, but over 20 cents, when you're looking at a 20, I would say you're looking at a 50 cent risk with a chance of $1.50 to the upside if you're correct, because the first target should be right there, the high of 30.68 to that doji candle of 31.17. So I think risk reward says that as starting a small position, I would consider starting it right here, even though the ideal would be maybe just a little under 30. To mess around over a couple of cents when you've got that kind of risk reward, I think it's worth starting a position. The big question is, what if you start your position and at the end of the day it closes towards the high and tomorrow it gaps up to about 30.30? What would you do? How would you then add? Well, my contention is I would need a little more time. I'd like a peak B and a pullback. Okay. Very small pullback and then a rally. So my recommendation, start a little position here. I would have a 50, maybe 75 cent stop, because this is the move that should keep going. And then in 2 days' time, let's look at it again.
Okay, thank you, Blas. I appreciate that.
Thank you for calling. I appreciate that. That's Freeman in Dallas. We'll be back. Dow's up 112, S&P's up 13.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians Hour. Whoops, I hope I didn't. Oh, I did. Give me 1 second. Yeah, let me get rid of that. Got it. Okay, good. So we've got a very interesting market. Dow up 135, S&P up 17. That weekly chart for me still says it all. I think we're going to make all-time highs. I know it sounded crazy. I said it in December, and we've had unbelievable whippiness. Can we do it? Not sure about that, but we're going to go to Richard in Tampa. Hi, Richard. How are you?
I'm doing fine, Basil. How are you doing?
I'm well, thank you.
I was looking at the Canadian dollar or the U.S. Canadian dollar pair.
Yes.
Hoping that the ECB announcement would have put it over the 124, but it looked like it hit basically right where it topped out yesterday, and I did take a small short position yesterday at the peak, but closed out at the end of the day. And I don't know if we're getting ready for a pullback or if you see more to the upside on that pair.
Okay, so now let's just talk about something. First of all, I remember now why a long time ago I used to do, especially overnight, I would do some trading of the currency pairs, but because I use the Chapman Wave methodology and I like to know the number. I need to know what it is, because by closing above a certain level by 1 penny or 0.001 or 0.0001 makes a big difference in my work, or going underneath it. I just could not handle saying 1.23605. Oh, 1.23604. I couldn't do that. It just got to me. So I eventually stopped doing that. And what's really interesting about it is that it doesn't change anything because I could have automated that, but I never did. And I'm looking at it right now. I'm saying, oh my God, I'm trying to do my lettering at this point, and it's very easy to do as long as I can see the numbers. So now this is what I've got here. And this is what I was expecting in the dollar currency. I was expecting that the dollar had a chance to pull back a little bit, and that would coincide because gold and the dollar went up together. I thought, hey, there's a chance that maybe the gold and the dollar come down together just temporarily, because I'd spoken about this a little earlier in the show. When governments get behind a currency, that's not Fidelity or Wellington or you and I or anything. That is, you're talking about mega bucks. So when they go behind something, it really pushes and pushes and pushes. As you've seen in Japan, the Japanization of the yield. 20 years, they kept it down to pretty much nothing. So now I'm looking at the USD CAD US dollar Canadian dollar currency pair. It made a high in the 120-minute chart at 1.23931. You were expecting it to go slightly higher, but instead to the 1.24. And what it did, I call this a high-level consolidation. And I'm going to show exactly what I mean. I'm going to draw this in. Anybody looking at Tiger TV? What I've done is I've just grabbed the parameters, the very top, that was made at 13, that's 1 o'clock on the 21st, and the low that was made this morning at 7 o'clock at about 1.23122. My eyes glaze over when I do that. What this particular pattern says is that you could, in fact, have an inside bar. If I went to the 30-minute chart, maybe at 10 minutes even better. Let's just go to the 30-minute USD CAD. So now you're out the position, and you're kind of wondering, is it possible that you had the right position, but it didn't quite go to the higher level that you expected? So when I look at this, everything about this chart says that there's a good chance that the incredible velocity to the upside has hit a barrier. It's just repelled a little bit from that barrier. There should be a little bit more upside momentum. I'm talking physics here. And that should take it maybe slightly higher. You might still get your 1.24. But if it comes at any point, instead of climbing and going, starting to treat 1.2380, let's say, as a support level, it suddenly makes higher levels. That means it could go a little bit higher. But everything about this particular chart, and I've got an alternate wave in the daily chart, which says it's an F/B. The MACD is very strong. The stochastic's at 91.33. And in the weekly chart, it's leg C, it's alternate count GC, but everything about it says it's probably C. And the monthly chart, and this is an incredible chart because it looks just like the dollar, says that there's a very good chance that the dollar Canadian currency pair wants at some point to go to 1.306, which was the high of March of 2009. So now that we've got that out the way and we've got a break coming up, I'm trying to stall as long as possible because I want to tell you, I don't see this as a short. I see it as a buy if there's a pullback. But give me a moment, because on a shorter term position, you might have a nice trade. So can you hold on?
Yes, sir.
We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. We're back with Richard in Tampa, Florida. And we're looking at the USD CAD. I'm looking at the 10-minute chart, what I call the naked chart. This is not a single technical tool. I'm actually adding a couple as I'm talking. But basically, all I've got are the candlesticks. And it went from the low of 1.232 at 550. So that's 350, 10 to 4. 10 to 4, I believe. Is that correct? Yeah, on the 22nd. No, what am I talking about? This morning at 5:50. So 10 to 6 this morning, Eastern time, and it went peak A, B, C, D, and then it had a spike to an E and an F. F is where you can, if you do get a turnaround at a peak F, well, watch out, it can give back a huge amount of gains, which it did. And what I'm looking at here is that within this context, there's just enough force to say that you could get on a 10-minute basis and using the 120-minute sideways trading band. I'm using just the last little bit here, that little plus that I'm circling right there on the 120-minute chart. That plus sign is actually a doji candle holding the 9-period moving average. And what I'm thinking here is there's just enough energy for it to maybe make in the 10-minute chart a peak A, later on in the day a peak B, and then between overnight and maybe even tomorrow, it goes C and D. And that should be either at the high that was made at 1.2388, or it goes slightly higher. My guess is if it goes higher, it doesn't go much more than 1.23910, something like that. So anyway, I just can't remember what a pip, what the pricing is. You know, with the S&P E-minis, you've got 25 cents. You've got.
If you look at the Looney contract itself, futures contract per pip is $10
per pip. Okay, so actually you give up quite a bit when this has a big move. So the spike that it had this morning from the low of 1.232 to the high that it made of 1.238. That's a lot of pips.
It's about $600 round way from the high to the low almost.
Okay, so here's my thinking. I don't know if you're really looking for something as a swing trade, just some kind of a minor pullback in the dollar. And let me just see if I can put the dollar on top here. The dollar, yeah, you see the
oil more than $1.
So CT, yeah, okay, but as a currency, it's had the same spectacular move on the upside as the dollar, and the relationship probably. You could use the crude oil as well. I don't disagree with that. And I'm looking at crude oil, and I think crude oil is just getting to an area here where there could be a pretty nice swing trade bounce. It isn't there yet, maybe. So this is what I'm looking at. If I can just go back to that USD CAD. I think you're probably right more than I am talking about it. Crude oil related, perhaps more than the dollar, but the pattern really matches the breakout in the monthly and the weekly like the dollar. So this is what I'm looking at. If you want a swing trade, I don't know if I'd put something on right now. This might be the exact moment, but I'd prefer to look at this pattern and say this rectangle pattern to me is very familiar. Very often within it, you can get a shorter term. As you did right here, you got an A, B, C, D, E, F. Here, I'm thinking you might get an A to a B, maybe a C and then a D. Almost, the rule is, in this arch formation, it can go toward, exactly to, sometimes it hits it on the button, or just a little bit over the previous high. So that's the high that was made at 9:30 this morning. And now I'm suspecting that if there's a rally, it'll be sometime this evening or tomorrow morning that you'll get a chance to see some kind of a pullback, and that should take it down to where it started at 1.232. And if it takes that out, your next level of support is 1.232. Now, I just wanted to say that to me is a trade that you would put on if you were looking for the short side without the expectation that it could build into something bigger. But because of this rectangle formation, the longer it stays here, the greater the impact when it breaks, certainly the low of this bar of the 21st, the one that was closed at 1 o'clock. So I'm looking at that and I'm saying, because if 1.227 is taken out, then all of a sudden you could look at a deeper correction. I would still call it a correction within the bull phase because the weekly chart is still very strong. That's the only reason why I wanted to go to it in that 10-minute chart, just to show you that the momentum might be slowing, but it would only be, as my eye sees it right now, a shorter-term pullback, and maybe we're looking at a peak right here. If it turns out to be B, it's not going to go much below 1.224, and then bam, it goes back to a new recovery high. So I would just treat it gingerly. If you were asking my opinion, not about what you're called about, but my opinion about the longer term, I think it's going higher. But it could certainly have it's certainly 1.20 is the 9-period exponential moving average. I'm not sure this is the move that's going to take it down because the stochastic and MACD are still so strong. I think it's going to have some flurries. It's going to make a trading band, and then I don't see it breaking out much higher than it is right now. 1.24s, I think you're correct. That's the kind of area that I think is going to meet with a lot of resistance. So I hope that helps you.
It did. I appreciate it.
Thank you. So summing up, short term, yep, it could pull back. I would be looking to buy it on a pretty decent pullback. That's because the main trend's still up. Thanks for calling, Richard.
Lately, everything is short term.
Oh, okay, good. Just like life. So let's go to Lou. Let's go to Lou in Nashua. Hi, Lou. How are you, Nashua? This is
fine.
New
How are you?
Hampshire.
Fine.
Lou, you
How are
good?
Yes, fine. How are you?
I'm good.
Good, good. I was thinking, what is your long-term prognostication for the S&P?
Okay, so that's a good question right now. Why? Because my bias has been to be long. It's still to be long. And if I okay, let me just quickly give you the summation. My analysis says that with everything that's been thrown at the market thus far this year in January, with the incredible 200-point up and down moves we've seen almost every single day, if you're looking at the weekly chart, we've still got tomorrow at 4 o'clock before it closes out. So far, it's above the 9-period exponential moving average. So far, it's making rising highs. It's held the up channel of the weekly chart beautifully, what I call the Chapman wave inside track. In my CD introducing the Chapman wave methodology, chapter 13 discusses the inside track. And what's most important about this is that the monthly chart has held the 9-period exponential moving average. So that to me is really important. But what's fascinating is that it's got a long way to go from 2046, where it is now. It's got almost 50 points to go before it makes a new all-time high. That's 500 or so points in the Dow. I just don't know what's going to get it there other than time. And it's used up time nicely now to possibly make a U-shaped pattern. So my suspicion is that it'll take us until January, or maybe the first or even the second week of February to go. It'll have to get to a C in the weekly chart. If I'm correct, I'll give you the downside parameters in a moment. I'm just talking, first of all, the upside. The weekly chart has got a pattern that I call the leg and the body, the stalk leg formation, which says it should go to D above 18,103. So here's the conflict. I've got the Dow going to a D, which is that's your objective, and that's usually where you've got to be really careful. But that would only be a C in the S&P. And if that's the case, that would suggest that the S&P would then have to take one whole week to pull back to make a peak C, and then another whole week before it can get to leg D, and then at least one more week to confirm whether it's a peak D. That takes me out to about the second week of February at the earliest, as I'm looking at it right now. Gosh, we've held up so far in January without breaking in the Dow and the S&P. In the Dow, we haven't broken that 17,262. Let me just get the exact number, INDU. We haven't broken the 17,262 and 17,243 lows that were made for that H pattern. But we also haven't broken out, actually it looked like we did in the diamonds, we haven't broken out the downtrend line, and it says that the Dow has to get to about 17,790, 17,820, and the S&P to really break out in the, it's already done that in the daily, good. Because IBM is a big handicap for the Dow right now. It's the reason why in my opening call we wanted to be long the S&P. Now, the S&P, funnily enough, has a nicer pattern as I'm looking at it, both in the daily and the weekly, to be able to go to that leg C. But I don't know if it's going to do that just in a big spike up over 3-4 days. It looks to me like it's just going to be a struggle as we're rotating through different sectors that are starting to show that they're getting kind of toppy. So your question to me is, do I see the S&P going up? What's my scenario? My scenario is that we should somehow squeak to the 2094 level in the S&P or a little higher, make leg C, then a peak C and pull back, not pull back very much, and then squeak to a D. And at that point, I think that I'm ready to say that there's a chance in February of a really sharp decline, and that decline could in fact involve more than 8%, something like 12%. And that's kind of the way I'm looking at it right now. So, Lou, I'm completely wrong about any upside potential. If the S&P by next week, early next week, let's just say early next week, Tuesday, takes out 1980 support. Any close under that, and I have to say to myself, wow, this is not good action. So my bias right now is to somehow squeak to a new recovery high. It says that the Dow over the next week and a half to 2 weeks should climb 500, 600 points. The S&P should climb 50 points, 47 or something points. And then we should get a mildish pullback and then a slight new high the following week or two. And then I think we look kind of vulnerable to the downside. That's just my reading as I see it right now. But I'm going to be really clear. If there's a close below this uptrend support line, and it's not too far away, 1988, oh, well, 60 points down or 60 points up, I guess. That's what we're looking at. That would be very negative. Not only would it be very negative, it would say something's going on in the chart patterns that will probably send the VIX, the volatility index. Oh, let me just talk about that. You look at the VIX, right?
Sure.
Okay, so let's just make it real easy. If the VIX at any point, instead of going down to the 16s, the 15s over the next 3 to 4 trading sessions, suddenly has a spike up and it takes out the 24 level, or watch out, I don't care where the S&P and the Dow are at that point, I'd say be careful. That's just suggesting that the selling pressure has just continued to remain in the VIX index, and you got to be careful. At this point, I just don't see it. One of the reasons why I keep biasing my subscribers towards the long side with stocks and indexes is that I see residual strength in some sectors. And in fact, we've rotated now into some sectors that were very weak. Even one particular stock that had been signaling downside activity and now is signaling, hey, I might be ready for some upside. So I could be completely wrong, but at this point, I think the VIX is signaling that it is weak. It wasn't able to hold above the 9-period moving average of 19.32 this morning. Its high was 19.23. Right now, it's at 17.25, 2 points lower. It's down minus 60. And that's not only that, Lou, when you sit back and you say, listen, where can investors go around the world? What could we do? You have to keep saying to yourself, the American market and the dollar, this is kind of the place at this particular point. So I'm not sure how you can resolve that other than to say until this upside activity is, and not only that, you've got Japan wanting to buy American. They've said they wanted to buy American stocks. And what's going to happen with the money that's going to be floated in Europe? Quite a bit of that money should be coming over here, I'm sure. So I think that we've got a situation here that says the bias, at least for me at this particular point, even though it's shaky, is towards the upside. And I need the proof to say that the VIX is really pushing higher and that the S&P and the Dow are fading, is starting to make lower lows. They haven't done that. When they start to make lower lows, I'd be saying, okay, the trend has changed. And right now, I don't see that. I see, so look at this, the RTH index, this is the retail index, had a tremendous pullback from the high of 70, all-time high of 73.04. And it comes down to 69.72, and here it is at 71.87 again, within a point and a half of its all-time high, and the weekly chart is actually looking quite good. So there's buying out there. That's kind of my bias. You asked me my bias. My bias is to say I think we're going to struggle, but make it to the upside. Hope that helps you, Lou.
Yeah, absolutely.
Thank you very much for calling. Always appreciate it. Thank you. That's Lou, New Hampshire, and we were talking about the S&P. I also went to the RTH, which is the retail index. I'll be right back. Dow's up 98.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Folks, just a real quick question in the den about VWO. What is that? This is the Vanguard FTSE Emerging Markets. It's in leg E in the daily, bumping up against 200-period exponential moving average. It looks like, because of the technicals are so good, looks like it wants to go to, it's at 41.62 up 47. Looks like it wants to go to 42.43. That's the 21-period exponential moving average. The weekly chart has just had a nice, this is leg B, and it's above the 200-period. If on Friday afternoon, tomorrow afternoon, it can close nicely above that, that would suggest it could make that cup pattern and try to test the 43s. The monthly is just very choppy. I can't do anything other than say this is the choppy phase that goes from this trend line to that trend line, and that's all I can say about that. Right there. Right there. Okay. Now, a couple of things. See, now we're up at 90, up 1130 in the Dow, giving back some. This is going to be the rotation is what I wanted to talk about. I had a question. Whoops, let me just see. I got an email just a moment ago. Mr. Chapman, oh, I like that. Mr. Chapman, been applying your wave count method for the past 2 years. Could you give an analysis on the Chinese ETFs, FXI, and ASHR? I've never really, thanks, Doug. Okay, so I've never looked at I don't know if I've ever looked at the ASHR. Doesn't matter. We got the FXI right here. The so I just wanted to say that on VWO, looks like 41 is really good support. But at this particular one, 40.75 is the 9-period moving average. You've got to watch closely. But it does look like it's in an uptrend. FXI is the, it used to be Xinhua. Now it's the iShares, the FTSE China 25 ETF. Leg D. Now, let me show you the wave count, Doug. I've got this. It made a G, an unusual G, pulls back very sharply back in December, it holds the 200-period exponential moving average, and then it goes peak A, B, C, D. Remember, D is what we look for. Pulls back, and then it goes again. A, B, C, D. Very quick moves. Now, the MACD is good. The stochastic's only at 69%, but it has crossed over nicely. That says to me is at 43.33, up 24 cents. That says to me that the 42.45 9-period exponential moving average has to be watched carefully. At this particular point, the weekly chart is good at 90%. The MACD is good. The stochastics are good. Even the monthly chart is improved. I think that the China FTSE 25 is acting very well right here. It's another reason when I went through many of these stocks, some are acting, no matter what's said, the charts themselves are looking quite good. So I hope that helps you. What I'm looking at is the chance that it could get into this, the candle right here with a high of 45.13 back in June of 2011. So that's about almost 2 points away. So we're watching that closely. So, okay, let's do this because we've got Larry Pesavento coming up. And boy, Larry, I bet he's got his work cut out for him today with all these different account trends, etc. Should be a great show as always. So let's go to... don't forget, folks, this afternoon that Steve Rhodes is doing his show. I think it's at 4:15. Front page of TFNN. You can still time to get it. And Tom did his thing last night. You can also get that as an archive. So let's do this. VIX index. As I spoke to Louis Nashua just now, the VIX index is going to be key. If by tomorrow afternoon it has a sudden bounce and closes up in the 19s, perhaps in the 20 area, that's saying, hey, watch out. The next week could be really volatile. But if instead, by Monday afternoon, Tuesday morning, it's trading at 16.13 to 15.27, it's going to say there's enough energy left over to be able to get the markets to move in this kind of pedantic way. And when you're looking at the prices, it's real simple. The Dow is being impacted by IBM. So the S&P right now is much better, and I'm saying that the S&P looks like it wants to go to the 2055, 2062 area in the next couple of days. It must hold 2030. I'll be back this afternoon with Tom O'Brien. Have a great day. See you tomorrow. Stay tuned for Larry.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.